Love to hear your thoughts on how you've built Starling, one of the most successful neobanks in the UK. But let's start with the journey that we've discussed many times, but it's always good to start with the journey of why, after a long period of working in some very large institutions in UK, Europe, you chose to leave your job at a big financial institution and set up a challenger bank from scratch. Walk us through that journey.
And first of all, thank you for inviting me onto, this podcast. You've been part of the story, Ronit, since the very beginning. I think you were one of the very, very first people to spot us, and you were so kind at the start of this journey. Because, yes, I had a long career in traditional banking. I had 35 years of working for some of the biggest banks in the world, around the world. And I decided in January 2014 to quit my job and start a new bank. And that was, that's quite a scary moment. Because all of a sudden you realize that the world is very different and things are done very different. So this is my story. I'm a technologist at heart. I have a computer science chemistry degree. I'd worked for Lloyds Bank, Standard Chartered Bank, ABN AMRO, UBS, AIB. And my job was, chief operating officer or chief technology officer, occasionally head of transaction banking. And I'd always challenged the status quo. And I felt that post-financial crisis, organizations were very fixated on retreating, of looking inwards, and had forgotten to listen to customers, and were being bogged down in regulatory and capital issues and putting things right issues, and that it could be an opportunity to do things differently. And I went around the world talking to financial institutions, trying to figure out what they were actually doing. And people were telling me that they were all embarking on projects, but those projects were being constrained by the technology, it could be constrained by culture. So I started dreaming of that new bank, of a new bank that would really sort of be based on very, very new technology, that have a new proposition of engaging with customers in a different way. And that prompted me at the end of 2013 to quit my job to start a bank.
And for most folk, including Gaurav and myself, who've worked in financial services or payments for decades, we understand what it is to be in finance, but setting up a new bank, setting up a new business is hard enough. I always think, I have the greatest respect for people, friends of mine who set up new businesses, that literally that 0 to 1 moment, to avoid cliches, but looking at a blank piece of paper and saying, I'm going to do something brand new. That's already enough of a kind of, whoa, I'm going over the cliff edge. But then in a regulated institution, like in a regulated sector like financial institutions, that sounds like an awful amount of work. Why don't you just sail around the world, or, retire to the Welsh countryside and read some books? Why did you put yourself through all this potential heartache and work? And seems like a big project to...
Yeah, it was very much. I think the question was that because I had other options meant that I could make that choice. I think if I'd been in a different place in my career, I hadn't got a certain amount of credibility or satisfaction from my job or the financial resources, I just couldn't do it. Don't get me wrong, I've never been an investment banker, so there weren't substantial resources. I was somebody that spent their whole career, in the back office, and realized that I knew enough.
Yeah.
That if I could actually get to the top table to drive the decisions, I could create an organization that could have the potential to change financial services on a global scale. So yes, it was it was having a certain amount of satisfaction with where I was, that meant that I could take this big leap. But it was really, really scary. You know, sort of, there was I that had been used to having, you know, my office and my assistants and, you know, and the 1,000 people that work for me and the business card. You were somebody, to knocking on doors in the city of London, trying to raise money. And I remember one day where it's, you know, in London, it rains a lot, okay? And it's certain that the heavens are opening. I'm absolutely drenched, and I'm walking from office to office in the city, basically knocking on the door saying, I'm Anne Boden. I've spent my whole career in banking. Now, and I have a vision of doing things differently. But I can't raise VC funding because people won't invest in me, but I want your firm to back me. People would look at me and go, first of all, people don't start banks. Secondly, nobody ever, neither of these banks are ever going to be successful. People never change their 20, 30, 40-year relationships with their bank. And is this person going to do it? This person who is a technologist, is somebody who runs banks. So they were very skeptical. And the more skeptical they got, the more determined I got to actually prove them wrong. And that was a story of starting Starling.
So they were skeptical on many levels, as you've just said. They were skeptical, one, because it's hard to start a bank. They were skeptical, two, because client relationships, this to be the famous stat, right? People in the UK and the US would change their partners, would get divorced, marriages lasted less time than bank accounts. There were all these stats. And then you said particularly, you mentioned it was hard for you to raise VC funding. Is that because you hadn't built businesses and you were already, 30 plus years in banking? So you weren't like a kind of characteristic, stereotypical, how should I put it, younger male startup founder? Was that also a big challenge for you?
Yeah, there were lots of obstacles. Yes, I was a 54-year-old woman. I was not a 30-year-old male hipster. Okay, I was somebody who had worked in banks. This whole fintech movement was being created by people who were from the outside the industry, telling the industry that they didn't know enough about how customers, felt the experience or weren't good enough. But I was one of them. I was one of the traditional bankers that was going to disrupt her own industry. And that is not how that is not the narrative. The narrative is all about somebody coming in from outside, having a brilliant idea, being a technical, sort of nerd, really going in there and basically, shaking up an industry.
Yeah.
This was somebody from the inside saying, I know a lot about the industry and I'm a technologist at heart and I understanding how banks work. I am going to build this bank.
So in a way, you, as Anne Boden, as you were the narrative violation, right? I mean, as they say that there are these stories that startup entrepreneurs, VCs peddle, journalists and the media magnify, and you were like almost everything that the narrative was, almost everything that the narrative wasn't about in terms of demographics, professional experience, etc. And two related questions to that. Number one, from your vantage point of all that deep in the weeds operational experience, what is it that you could see that needed fixing that maybe people without that experience couldn't see, whether they were salespeople in banks and investment bankers, all these fintech kids? And number two, what is it that you think that the fintech founders who are outsiders coming in, who are like, oh, it's all software, it's all tech, what is it that they kind of typically miss or get wrong because they don't have your experience in the weeds?
I think looking at the problem from both angles, okay? If you are in a big organization, you are constantly trying to grapple with incremental change. And somehow I think lots of CTOs, CIOs, CEOs in big organizations haven't taken time out to re-educate themselves, to think about what's happening in the outside world, in the world of tech. One of the biggest challenges I had was not to learn more things, but forget the things that were outdated.
Right.
I knew so much that I gained on this 30-odd year career, but that knowledge was actually holding me back. I thought I knew how the world worked, and things had moved on. And now if you then look at if you look at then what the people coming into the industry come up with, they're new to the industry, they think that the people that have spent 35 years working in banks are not very good. The people working in banks are very, very, very good. I was one of them. You're one of them. They're all very good, technically dynamic, go-getting people, but they're dealing with a different problem. So I think there's a certain amount of arrogance about people who criticize how things are done at the moment, and a big underestimation on the scale issues, on the management issues and cultural issues you deal with in a big organization. So I was in the middle, really. So I took the view of taking all the knowledge I had in my career and being quite ruthless on testing whether what I believed in was still relevant. Spending time with lots of different people, going around the world, really testing that what I knew was really what I was correct, but wasn't some mythology that I picked up in my career.
Could you expand on that last bit about, you went around the world, it was almost like you did a fact-finding study to sort of do a kind of, hey, this is what I've known or learned for the last 35 years, what's valid for the future and all. Could you walk us through that process? Who did you go and talk to? And if you can't mention names, if you can talk in generic terms, that would be really interesting. And what were the bits of your experience over 35 years that you had to unlearn to build a next generation 21st century bank?
Yeah, I think the first thing that I picked up was that, this was post great financial crisis, and and we were all surprised by it, admit it, when it all happened.
Yeah.
We're looking at something else.
Yeah.
It happened on our watch in some respect. So post financial crisis, I actually started by going to Harvard, and trying to go back to, I spent a couple of weeks hanging around in libraries and trying to talk to people about the truly, let's get banking back to the basics. Let's try and look at banking as a business model, right? And I wasn't on a course, and I didn't have anywhere to go every day. I just decided to get on a plane and go to Harvard, right? So I spent some time talking to as many people I could to try to understand what was going on. I then spent a whole period of time trying to understand how Basel had reacted to Sussex's financial crisis and what the responses were. And then I went out and talked to people around the world about what they were doing. And I'd go to I'd go to big cities, and I would talk my way in to see the CEO, and I'd ask them about what they were doing. And they'd all tell me, okay, we're doing this big project, big transformation. We're moving everything onto the mobile. We're moving everything onto X or Y, whatever. And we're going to do this to the branches. And they tell me the story. And then I talk to the CTO. And the CTO and the CIO would have a different story about all the problems that they are dealing with and how difficult it was. And then I speak to the CFO, and the CFO would say, well, none of these numbers add up. And how is it that we're going to spend all this additional money and nothing's going to be cheaper? And I think that was the heart of it, the realization that if every single transaction in an organization was delivered at optimum efficiency, the dial still wouldn't move. So something different had to happen. So I started dreaming about, what if you started from scratch? Instead of taking your existing cost base and breaking it down and optimizing it, what if you actually started the other way and started from scratch and build that cost base up from the bottom up? And I came to the conclusion that would be a fantastic idea. And then I had sort of two things going on in my head. It was, one of these days, I'm going to start my own business. I've never been an entrepreneur. I think I could do this. I'd love to run my own business. And then I was thinking about and dreaming about a new bank with new metrics and a new customer proposition and new technology. For a few weeks, those are definitely separate concepts in my mind. And then one day I got up and decided that what was stopping me from being that person that started the bank? And the only thing that was stopping me was that people would laugh at me if I tried to do something so audacious.
Yeah.
Right. It was.
Yeah.
And then a couple of weeks later, somebody asked me what I did for a living. And I said, I'm starting a bank. And that was the first time those words came out of my mouth. And I realized that I didn't know anything about any other business. I only knew about banking. And if I was going to start a business, it had to be a bank.
And when was it that you said those words, I'm starting a bank?
The 1st of January, 2014.
So during 2013, you'd been to, is that when you'd been to Harvard, you'd gone around the world?
There's two processes. So I left RBS, and I spent about a year going around the world talking to people and playing in the fintech world. I got involved in Go Cardless, and I was advisor there. So when there was 4 or 5 of us, so I was involved in that, and and then I went into Allied Irish Banks as the chief operating officer. Yeah. And then I went on another tour in the summer of 2013. And it was the 1st of January 2014. I said words for the first time.
And when you decided to build this new bank during 2013 and you verbalize it 1st of Jan, so very symbolically in 2014, what is the type of bank that's in your mind at that stage? And how was it different to I mean, I kind of know the answer, but I'd love to hear it in your words. How is it different to all the banks that existed at the time in the UK or Ireland or elsewhere?
Yeah, okay. So to put this in context, I spent most of 2013 trying to return AIB to profitability. So I had spent a huge amount of time trying to reinvent processes, trying to look at the individual processes of the bank and come up with something that was optimal, and then to build a cost base and build a business model and build a financial model that reflects a bank that's profitable. So I'd spent a huge amount of time in retail banking profitability and service metrics and how that all worked. So the new bank that I was going to deliver was going to use the best possible technology to deliver the best service, and the customer engagement would be fulfilling and interesting. Now, at that time, there were no new banks being started in the UK. We didn't know there were any. This is only 2014, and it wasn't the fact that we're going to have an iPhone and Android, and we were still talking about sort of other devices, not just to the mainstream. Would there be a Windows phone or whatever? So at that time, the whole concept of people doing everything on their mobile was a bit ahead of its time. And people didn't believe that people would do everything on the mobile. People didn't believe that you could do current account transaction banking could be profitable. And people didn't believe that you could do this and be profitable at the same time.
Right. So it was still early in the the mobile phone taking over our lives. And then there was the question mark about product and profitability. When you launched or you built Starling, what was like the first product? What was like many fintechs start with a product, like it's like, oh, I'm going to do FX retail cheaply, or that's obviously Revolut's idea in a way. And then in Brazil, Nubank was like, credit cards are 100% plus APR in Brazil. I'll do credit cards cheaper, better. What were the kind of one or two key products you started with, or was it more of just a vision that you started with rather than products as you began to grow?
When I look back now at the business case and the decks I was trawling around with in 2014, nothing too much has changed, actually.
Really?
We forecast, it was a 5-year plan. We got signed off by the regulator. I think we now 4 or 5 times the volume we anticipated in that plan. So it went much faster than we ever anticipated. Yes, you talk about the lever. What do you use to break into the market?
Yeah.
Do you use FX? And European propositions have been really based on using FX because it is the cost is from the big banks. In the US, that doesn't really work.
Yeah.
So you have to get something else. And then in certain countries is the lack of it's the whole unbanked and underbanked sector. In the UK, the proposition that I came up with was just to do current account banking better. So that's probably why nobody actually thought that it was going to fly. Okay, it was,
what a boring product.
Yeah, so we've got a situation where you've got, this is my pitch, okay? I'd go in and I'd say, okay, I'm Anne Boden. I know all about banking. I've been working in banks around the world for 35 years. And I'm going to build a bank that's going to have the best current account bank in the market. And and it's going to be free. And we're going to, and we're going to have the best technology. The service is going to be absolutely wonderful, and it's going to be very profitable. Now, people said, well, hang on, this model doesn't work. How does that work? But okay, so now we're in, my New Year's letter in 2022, 2023. We now represent something like 9% of the business banking in the UK. Right. We have got to half the market share of Barclays in 3 years, and they took 300 years. So we have 3% of retail market share. We're the #1 bank for service and for capability in the UK, rated by the Competition and Market Authority. That's an independent survey by the government. And customers love us, and we continue to grow. And we have a substantial run rate of profitability. So what I pitched in the beginning has, we've managed to pull off. But I think getting back to the point, what was the lever? How did we get in there? I think there was just persistence. I think that once we had, the capability of the app, the user experience, the branding, what the organization stood for, people loved it, and people told their friends, and people became real fans. But the customers that we appeal to and still appeal to are not typically those people who are early adopters.
Interesting.
Our customer base is a little bit older, really want a brand they can trust, really want something that's a little bit more sophisticated and mature and reliable. And we tapped into a part of the population that really resonated. We are recently there was a survey, and we came out as the 7th most trusted brand in the UK. And this is across everything now. There were no banks on the list. We scored above Lego. So we are a big brand in the UK and we're very successful.
Awesome. I want to bring Gaurav into the conversation. Gaurav runs a fintech in Dubai and has a lot of experience in investing in and building businesses. I'm sure he's got a lot of questions now about how to get under the surface, under the hood of what the building process has been like of Starling. So over to you, Gaurav.
Thank you so much, Ronit. And Anne, I must say it's wonderful to have you here and share your story with us and our listeners here today. I'm very lucky to have been at the initiation stages of digital banks the world over. And each one, the thought process and approach is always different from the founders. So it's wonderful to put some questions forward to you as well for our audience from my perspective as well, selfishly, but for everyone else. So thank you for your time today.
Thanks for inviting me. I really enjoy it.
So the first thing I want to do is just, we take it for granted with your position and knowledge today of how people can access information about you. But from your perspective, what I'd love to know is, why did you first call it Starling Bank? Can you tell us about that?
Well, we did an awful lot of research about the sort of names that would resonate with people. We didn't want to be 3 letters stuck together, as sort of, because that's what old institutions tend to be called. We didn't want a name of something like a fruit, right? Because there's been a whole range of banks called after fruit. We wanted something that would stick in people's heads, but also had quite a a subtle meaning. The Starling bird are quite they work as a team. You can see them flying through the sky. They elegant, they swerve, they swoop, they coordinate, and when they get into an area, they knock the other birds off the pitches. So the idea is that we're cooperative with each other, we're elegant, but we also, don't back down. And so that's the subtext of Starling. But it also tested really, really well. And it seemed to hit the spot.
Well, that's a very, 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 I never knew that about Starling birds. And I must say my nephews are birders in London, so I'll have something to share with them in our next conversation. But to somebody that doesn't know Starling Bank and doesn't know you, in the briefest kind of package, if you were to tell somebody who was not from the fintech space or banking, or a teenager perhaps, what is Starling Bank? How would you describe it to them?
Yeah. Okay. So it's everybody uses a bank every day. You have your checking account or current account at a bank, but this and you can choose Starling as your bank. We provide all the services you need to conduct your life, but our user experience, our user interfaces are far superior. And the extent of our product is quite wide. So, for example, as well as having a sterling account, we have accounts in other currencies. We have your business account. We have lots of additional features to help you manage your money, whether that is something like savings goals or various tools to help you to manage your business account. So it's everything another bank does, that's a traditional bank, plus a huge range of features, an absolutely wonderful service that goes with it. And it is constantly evolving and getting better.
And the more we talk to founders, I think Ronit and I believe, have done over 50 interviews as of late. There seems to be a single thread almost like the tip of the spear when it comes to a journey, as someone as prominent as you from a leadership perspective has. It's about a mission statement. What would you say the mission statement of Starling is, where the rest of your team and employees, whether they're technologists or not, band around following that mission statement to keep making things better? So what would you say the mission statement of Starling Bank is?
What really matters to us is some of our values, and one of our values is do the right thing. So, and do the right thing means doing the right thing for our customers, our and our wider stakeholders. So, and that is one of our core values, where everything we do is focused on that. So we do everything through that lens. So do the right thing is to make sure our customers benefit from absolutely everything we do. Do the right thing is to make sure our employees have everything they need to do a good job. We have a product called Engine by Starling, is where we provide our software, and that powers Starling, because we built all our technology ourselves. It's our own core systems. We don't use anybody else's technology. We provide that to around the world to other banks. And when we demo that to banks in various countries around the world, we show them all the tools that are available to the employees, and people are really taken aback. I mean, you go to that much effort to make sure that your people in the contact center or your finance team or your treasury teams have that experience. And yes, that is so important. Whether you're a customer or whether you work for Starling, you deserve to be taken care of and have a great experience. And that sort of emphasis pays back in so many ways. Because we put so much effort into making things very convenient for our own people, they go the extra mile to serve our customers.
Ronit previously touched on product and how you first started to build Starling and offer product services into the market. And you've just told us about Engine, your software as a service that you're providing, and what it does for your internal employees as well. Focusing on technology itself for a moment here, that's a very daunting journey when we recap starting things from blank, especially when you want to be as creative and at the forefront of offering what you wanted with Starling. From a technology roadmap perspective, the idea of building everything in-house yourself versus working with existing tool sets that are in the market, like people would use your Engine service today. How long did that take for you to discover or decide, from your point of view, of building a bank with so much in-house technology before you could build revenues? Was it a very simplistic journey? Was it always from the forefront? You had to build your own technology, or was it a debate that resonated for a while?
That's a really, really interesting question. When I started, I knew very well I needed new technology. And I tried to do some partnerships with some big technology providers to build it for us. But that, although I had quite a lot of commitment, we didn't really get much traction, if you understand. It's a nice concept. It never got there. I also spent a lot of time in that period trying to figure out what technology sets product sets we'd use to build Starling. So in the end, I decided that I was going to hire engineers and we were just going to start. And people heard about what I was doing. So I was trying to build this bank, and I was going to build the technology. And all the other sort of people that were coming into the space were buying packaged software. But I knew very well that if I crack this problem of starting to build a technology base for a new bank, it would give us huge potential, to the industry as a whole. And I could make the decisions. I hadn't raised any funding. I didn't have I didn't have any investors, so I didn't have anybody to please. I knew it was the right thing to do to start building the technology. And I started looking in the industry for people that could start coding for me. And a couple of people heard about it, about a woman that's sitting in an office in sort of East London, was trying to build a team to build a bank. And some people heard about it and turned up and started coding for me. So the gentleman called John Mountain, who is now our Chief Operating Officer, heard about the concept and the challenge. And he'd worked for lots of big banks. And he'd heard about this mission to rebuild the stack. And he turned up and he started and committed the first line of code. And it was a huge effort in front of us. It was a big thing to do. But now we have a big engineering base. We have 300 engineers, some of the best engineers in the world, and a huge amount of breadth in what we built. We do the whole lot, your card processing, to all the various services you need. And most of, that is state-of-the-art technology. And we're a technology company at heart. That's what I love. I'm a computer scientist. I haven't coded anything at Starling, but in the early days, I fixed things. But we're now out there talking to banks around the world about, getting a piece of Starling magic.
That's unbelievable. That's unbelievable to hear that you built a bank with so much technology out there. You're offering it as a service now, as a split. Do you see that becoming a separate company onto its own so that you can continue taking Starling Bank as its own forefront enabler of services in the financial sector, and perhaps Engine becoming a purest technology hub?
We operate a separate company called Engine by Starling. The vision is that we'd be an international, software company providing software to banks around the world. And the UK bank is the case study. And we've already got supervisory boards coming from all over the world, coming to see how we do things at Starling. But it's not just the technology. They get a flavor of how we do things. They get a flavor of the culture, how we go about projects, how we go about deciding what we're going to do, how we decide to price some things, whatever. So it's as well as having a bit of the technology, they have a bit of how we go about doing things at Starling.
When you look at revenue drivers for the business, you're no longer in the initial discovery mode that you've made. As you mentioned before, you are profitable and revenue generating to a degree for a while now. When you're looking forward as a mature business, which is what you are in startup speak today, even at 10 years old, compared to similar institutions that are 3 centuries old, as you've referred to in our session, what's next in terms of the revenue drivers for Starling? Do you sit on the precipice of creating completely new products and services, or do you continue to have so much room in the scope of what exists to make better that there's no need to reinvent the wheel? What does that process look like for you right now in your journey?
So in the UK is creating more market share. We have a big market share. The market in the UK for what we do is very large, and we see us getting bigger and bigger in that market. And also, delivering more products and services to our existing customer base. And that really, the UK is, we're a big brand in the UK. Most people have heard of us, understand what we do. It's making the most of that. And then with technology at our core, it's taking that and doing it with other banks around the world. So those are the 2 big things that we're involved in.
In the space, my last question to you before I hand back to Ronit, with what's happening with cryptocurrencies, CDBCs, and parallel ecosystems with their own loose frameworks or new frameworks, shall I say, of interactions for financial services and, you know, trusted mechanisms, as they say, for investments. How do you see Starling playing a role with Engine or on its own in that space, from reaching a new audience or providing new services and products? Do you see it as a bellwether adopting these technologies, or perhaps creating more conduits and accessibility for people in those spaces connected to traditional banking services? Where do you see the interaction is what I'm trying to ask.
Yeah, at the moment, sort of crypto exchanges are a source of risk to the traditional banking payment ecosystems. We see the number of legitimate transactions between our customers and these exchanges is relatively low. But if you look at the total amount of fraud in the system, a high proportion of that is actually attributed to transactions going to crypto exchanges. And therefore, unless we get some of these players adopting rigorous standards, they will be a threat to our customers. So I am very, very conscious of the fact that we need something to regulate these industries. So, but I think that we come up against if we do regulate them, what happens? But setting that aside, I think that organizations such as Starling would be the organizations that are most likely to be able to provide all the various wallets that we need to interface to new sorts of payment mechanisms. You know, Starling has created a huge amount in a short period of time. We're probably more capable of evolving and taking advantages of what's going to happen. And I love all of this stuff. You know, I think that we're always on the lookout for something really interesting. And I think it's going to be us that's probably enters the space and make a success of it when it becomes something that we think has legs.
I apologize to the head of your product roadmap if I jumped the gun and perhaps inadvertently revealing something that you're doing. but that's what it sounded like to me. But I have to say, very cool. So I'm very keen to see what you do. But apart from that, you touched on something before I hand back to Ronit, and I apologize to Ronit for jumping back and stealing the mic here. You talked about the regulator in the context of this new ecosystem. But very quickly, I just wanted to touch base with you on your position and your experience with the regulator, with what you were doing entirely. How has that experience been? Have you seen it evolving in the last 10 years? Have they been getting better and better and faster? Or have they been very measured and not supporting, but just providing frameworks because they are the framework people, essentially? What's your experience been with regulators in the last 5 to 10 years?
I think I was very fortunate in that when I started Starling, the regulatory environment in the UK was very supportive to new competition. Post-financial crisis, there was a feeling that consolidation of the number of banks had taken competition out of the market, and the idea was to introduce new players that would improve service for everyone. So Starling came to market in 2014 onwards in that environment. I think things have got a lot more complicated over the last 6 or 7 years. There are more ways of doing things. There are, new technologies that are out there that are challenging the status quo. I think the UK and the UK regulators will be and are very forward-looking. And will put the effort into making sure that the UK is at the forefront of some of these initiatives. We all have our views on how, regulation can be seen as an obstacle, perhaps innovation. However, the really forward-looking organizations, the innovative organizations, take that as a challenge. How can we give services to our customers in the safest possible way? And how can we make sure our organizations are as safe as possible in all sorts of areas? And to be honest, I think that the UK regulator, the PRA and the FCA, are very supportive of innovation and do their level best to make sure that the UK does well in these spaces.
And thank you so much. It's been a pleasure talking to you, and I look forward to perhaps meeting you in person with Ronit sometime in London, or perhaps even in Dubai or the UAE. Thank you. Back to you, Ronit.
Thank you very much. Enjoyed talking to you.
Maybe a final couple of questions as we wrap up before the top of the hour. And a lot of bank CEOs have spent the last 10 years, particularly maybe 3 to 5 years ago, talking about how they were rebooting their bank, how that these fintechs, these neobanks that were popping up in the UK or Australia, or elsewhere, were just a shiny little app, and they could copy and improve and do whatever the neobanks were doing. And I used to love this line, and I used to, just between us and whoever's listening to this, I used to cringe when the bank CEOs would say, "We're a technology company. We're a tech-first company. We have so many people working in tech." What did you make of those comments? I have my own views, but
the more people you have working in tech, the more you have, more money you spend on tech, doesn't mean that your tech is any better. Right. So, I had budgets of billions and thousands of people and in my old world, but I didn't have the confidence to build stuff. And
why is that?
Because the organization was focused on managing personal risk rather than managing the risk of the organization. So you imagine the situation: a new CIO goes into an organization and he appoints, and it's normally a he, appoints and have a dig about that, appoints a management team. And the right thing for the organization to do is to take bold steps in the right direction, using the best technology and the best architectures, and get there over time. But what they, deep down, they think about the personal risk involved in embarking upon something and the failure. And we're all human. And people go to committees and say, they have a plan that says, I'm going to finish this in a year. And they look at it and go, well, I don't want to be late, so I'll say it's going to be finished in 18 months. I don't want to be late because that would be bad for me. And they go to their boss, and their boss says, oh, I don't want to be late, so I'll stick another 6 months on it.
Yeah.
When the project gets to the top of the board, it's 10 times the cost and taking 10 times as long, right? And everybody will have something to say about their project. And that is because we're thinking about our personal risk profile rather than the organization. And that is why when you start in a different place, when you start in a place where we never give dates in Starling, right? We'll do it as fast as we can. And we allow people to make mistakes. And we celebrate it when people make mistakes, and we make sure that we have all the mechanisms around us that we can recover from those mistakes very quickly.
Hmm.
And in that environment, you can move fast. And until the big banks realize that their ways of managing culture, managing individual performance, and manage manage some of the cultural things around these things, they
Right.
will not be able to deliver projects.
So if I had to summarize, you're talking about personal incentives and how rational it is from an individual personal banker perspective to take the approach they do. And then this kind of bureaucratic structure. I think there's an old saying, right? If you want to get something done, you do it with a small team. If you want to do beautiful process, you have big teams. Or there's actually, is it the one pizza or the two pizza rule? Who was it? Was it Gaurav?
Yeah,
Jeff Bezos? Who had the two pizza rule? If your team's bigger than the team can't share two pizzas, it's too bigger. Am I making this up? I read that somewhere.
That's true. That's true.
Yeah.
I think
It's not. Look, we're a large organization now, and we have.
Sure. You
Yeah,
need more
and
than
we have,
two
and we
pizzas.
have more than, we need more than two pizzas, okay?
Yeah.
But it's all a question of being prepared to let very, very intelligent people who have deep down the
Yeah.
interests of our customers and the organization at heart
Mm.
make decisions,
Yeah.
making sure that those people are allowed to make those decisions,
Right.
occasionally.
Right.
And that is the heart of successfully delivering capability in the financial services industry. And like it or not, we've got very, very smart people in the banking industry. They are very good.
Yeah.
But
It's
the way things have developed in recent years,
yeah.
the enemy of innovation and change, and the exploitation of technology in the sector.
It's reverse. It's almost like reverse alchemy, right? You start
Yeah.
with gold in terms of talent, you end up with lead in terms of product and service and output.
Very
I
interesting.
think when you look at it, right, it's as someone that's been in operations of delivering fintech operationally for the last 20 years, the one thing that I've done in banking recently was offer advice to do two different scenarios. And what we're talking about right here reminds me of these things. One is I was advising a bank in KSA, and they wanted to do a number of, they're one of the biggest banks in the Kingdom of Saudi Arabia, and they wanted to become a cutting edge service provider. And when I met with the CEO and I sat with him and we gave him a roadmap of what he should be doing as a service offering to the kingdom, he said, I want to do all of this. And I said, you can't do it. And he got very offended. And I said, let me finish. I said, you can't do it in your current entity with your legacy team and your legacy technology because you're building on top of the wrong fundamentals.
And your legacy culture.
I said, start a completely new company that you own, fill it with the right people, fill it with the right direction, put the people who are grounded to drive it, and you will succeed. And they did it. And that's the message, where that echoes through this. And so, Anne, what I wanted to ask you on the back of that, and I've done that here in the UAE as well with one of the federal banks, they adopted technology and lead the market in SME banking now. But from your perspective, if legacy institutions set up fundamentally fresh new institutions within their hierarchy from a technology first perspective, would they be better positioned to offer services in the market, or would they still fundamentally fail to compete with people like Starling?
I think that we should never underestimate the large organizations with great customer propositions. I think that it is not black and white. It is not that, it is very, very it is very important that we actually start thinking about how these organizations can have a step change into the future. And it's not done by having a digital flanker brand in a warehouse on the edge of town. It is not done by the large, huge monolithic projects with thousands of people. It's a bit of both. And I think they'll do it, to be honest. There's a huge amount of talent in big organizations, and people will learn, and they'll give organizations such as our own, a run for our money, but it is not as simple as do a digital startup or fail. I think there's a lot more nuance in addressing that problem. But, there's a race on, and who's going to win?
I'm conscious we're at the top of the hour. Maybe I can squeeze in one last question, Anne. Yes. If you were starting this all over again, and you were in your, mid-50s after a long, distinguished career in banking, would you choose to set up a bank again? Would you want to do a startup? And what would you do differently if you wanted to do a startup? What would you do differently? What is kind of feel like the learned experience of the last 8 years of, good times and achievements and highlights, but also some pretty tough times, particularly in the early years of fundraising?
I think that if you knew what the journey would be like, you'd never start. And I think that the wonderful thing about starting an initiative such as this is that the future is unknown. You don't know that the next problem you have is going to be the first of 100 problems you're going to have. Looking back over that sort of 9 years, every day has been exciting. Every week has been a big achievement. There've been a huge number of downs and lots of ups. But it's been one big journey, and I think I'd start again. I think I love everything I do, and I think I've got the energy to do it again. But if at that time when I started, did I think it would be this successful? No. Did I think it would happen so quickly as it had? No. Did I think we'd be so difficult? No.
So it was bigger, it was better, it was tougher, it was harder. It was an incredible journey. Thank you so much for sharing that with us today, Anne. It's a real pleasure on behalf of Gaurav, myself, and our friends at CFTE who host this podcast. Thank you so much for joining us and giving us your time. I know you're a busy lady.
Thank you very much for inviting me. I really enjoyed talking to you both. Thank you.
Thank you.
Thank you, Anne.